Hello everyone, my name is Gregor and welcome to our new episode Surfing the Elliott Waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. So, as you know, there is some slowdown of the recent rise on stocks due to this US-China tensions. However, this could be maybe only just a temporary political game, so we'll see how this will unfold in the upcoming days. I still think that media will just now trying to focus on something on current developments, but again, when there will be Friday coming, US non-farm payrolls report, markets will have something else to focus on, and this will be and then again a new driver for the sentiment. So I think that this current price action that we are seeing is just temporary slowdown ahead of non-farm payrolls report, and I think that US dollar could, from a technical perspective, could see more weakness going forward. However, of course, if data will be maybe will be bad, if we will see somehow that jobs are going to be less than the previous month. If this cycle, which has been improving over the last few months, if this cycle will come to an end, then of course it means that Fed should be less aggressive, less hawkish, and on the opposite side of this, it means that stocks will most likely hold the recent supports. Okay, now let's take a look what we see on these markets from an Elliott wave perspective. Now on the euro dollar, we still think that this could be a final leg down here for wave C, for very complex 7 swing correction from 2008 highs. We are at the 78.6% around parity. However, there can be room for even for this latest ECB intervention level, which happened back in 2020. It was around 0.9. So let's see if we can get into this zone, or maybe even see a reversal from it, because keep in mind that this of course this drop came down while the inflation rate has come to the upside. So if now with the new hiking policy across different central banks will be successful, if because we can already see housing markets is trying to cool down a little bit. So if this inflation will peak in the upcoming months, then it means that maybe this changes in trends on the currencies could also be around the corner. Now looking at this euro dollar pair from Elliott wave perspective in the short-term basis, well, there was a very nice rise here away from that low from July 14, and notice that this can be very nicely counted in 5 waves, meaning that's an impulse, especially if you consider that the current price action is just much more slower. So I think that this can be potentially even wave B, or maybe even wave 2 of a flat wave 2 flat correction. So I will be looking for more upside, but 101 is the key support level here. So what happened here on the intraday basis? Well, market spiked to a new highs, it cleared out some stops, okay, and now it comes to the downside. So maybe something similar can occur in the opposite side until we get this non-farm payroll support, which, as I said earlier, can be the main driver for this market. So I do not expect any breakouts ahead of that event. Now let's take a look also on German DAX. Now German DAX is actually, it's been a while since I covered it in the video, but what I'm looking at here is tracking just a very deep complex correction probably that can still be underway away from that 2021 highs. However, I've been looking for this reversal to the upside recently after I noticed this failure breakdown back here at the start of July. So what happened back then is that market came to the downside. There was a very aggressive, very sentiment all across the different stock markets. But what happened is that market actually finished the week here higher in the same week here. So we rallied quite nicely with a minor bullish impulsive interpretation. And what is unfolding so far? Well, if you connect those swing highs and swing lows, you can actually see that this can be even a leading diagonal. So this can be a reversal in trend, meaning more upside could be seen after a pullback. So looking at these substructures here on the smaller time frame, well, notice that we have very nice 5 waves up and now an ABC pullback. Very nice support would be, if we get this dip, of course, would be around 13,000. Sometimes the markets are just very strong whenever they turn around, so you will not even see this kind of a pullback. So whenever that happens, it means that you are in a really strong bullish phase. However, I still hope that we will get some retracement, because this could give speculators and different traders a chance to for better entries at the supports. Now let's take a look also on cable. Now cable is slowing down a little bit after it came out of this ending diagonal. We've been looking for this and calling for this rise for a while, for this reversal in price. So far this happened in 5 waves as a leading diagonal. So I see this as wave A, maybe wave 1, as part of an ongoing new uptrend. So I will be looking for more gains after ABC setback. Okay, so this current slowdown that we are seeing is coming ahead of Bank of England rate decision, which will be tomorrow. So they are expected to raise rates by 50% by 50 basis points. But the key driver for the pound will be if they will be looking and projecting more hikes in upcoming meetings. So if this will be very clear from the reports, then obviously this could mean that cable could drive prices even higher. So the support is at 12060 and 1.2 psychological level, very nice round figure where this current setback could stabilize. Of course, I will be looking for more upside. I think that there is room for 124, maybe even 125 level, as long we are trading above 117.55. That's invalidation level, because we know that even if that's a wave 2 and if that was a 5-wave rise, meaning a change in trend, obviously this price should not retrace more than 100% of the previous move to the upside. Okay, now let's take a look on dollar yen. So dollar yen, firstly, big picture here. I mean, big picture, it's a daily, yes, still very healthy uptrend. I think it may continue even higher. We recently came to the downside after touching this upper Elliott wave channel resistance line. We've been looking for a reversal with our members, because we, at the same time, we also noticed this wedge pattern known as an Elliott wave ending diagonal. So normally you will see these patterns playing out and driving prices higher, but very slow overlapping price move with no real momentum. Okay, but normally when the direction will change, increased momentum and volume will show up, and usually you will see very quickly retracement all the way back to the starting point of that wedge pattern. So I'm not surprised to see this kind of a drop, and I think that there can be more weakness coming after a rally. However, watch out the US yields. Okay, so US notes recently came to the downside, so US yields obviously are higher. So we'll see how US yields will respond to upcoming non-farm payrolls report. If US yields will again hit resistance, then I think dollar yen will do the same, and ideally this will happen around 134.60 level. So that's the ideal resistance for a next sell-off. Now, if we look back at the big picture, what I'm tracking here is hard degree wave 4. We already touched the previous wave 3 swing high here, or the starting point of a wave 4, which is the first support. But since this drop is very strong one, and also came below this Elliott wave channel, I think that there can be more weakness coming until an ABC fashion here into wave 4, even possibly back towards 126.30 level. Okay, so watch out for more downside here. Now let's take a look on silver. Now I've been tracking on silver this counter-trend price action for a while. Now, if you are familiar with Elliott wave cycles, then you can clearly see here an ABC drop. Okay, so this ABC drop, okay, is a corrective price action. What is very significant is that we have also seen that current drop came all the way back to 61.8%. So that's a perfect key support level. Plus, there was the lower trendline support where current drop was limited. So I think that we could see more upside, especially if we consider that it was a very nice rise here back from 2020 lows, clearly in 5 waves. So I will be looking for more upside here. But even if, let's say that I am trying to show you some bearish wave count, okay, let me hide this for a moment. Okay, even if I try to show you some bearish wave counts, and that was a 5 waves drop, and I say that we go much lower, well, this should occur after a 3 wave rally. Okay, so even bearish interpretations need to see an ABC recovery. Okay, so normally this will take price all the way back to the previous 4th wave here. So I think that there is room for more upside even if you are tracking bearish interpretations on silver. Okay, so watch out for 22.50 to recover up to into this area in upcoming weeks. Now finally, let's take a look also on ASI. Now ASI here came to the upside. However, we have seen some resistance that been triggered this week after RBA. They said that obviously they are not saying that they will hike in the next upcoming meetings, but they will be looking and watching the data. Obviously, that means also on a global scale. Okay, so it's very important because the GDP in the US was very poor last week, and then again we have non-farm payrolls report. So this is of course something that can trigger recession on global scale, and obviously will impact Australia as well. However, from an Elliott wave perspective, I see this pullback as a temporary one, can be wave 2, can be even wave B. Very nice support at 6.9 level, but I'm aware of potential more complex wave 2, wave B here as well. Notice that I'm observing the potential 3 waves down for wave 2 as a one interpretation and one as a flat with supports already here being in place. So in either case, I think that ASI could fly higher as long as the market is trading above this 66.85 invalidation level. Traders, thank you very much for your attention. I hope that you enjoyed this video, and again, talk to you soon. Bye.